Hey, this is BA. We're doing initial analysis on Caterpillar stock. As you can see here, it's in a bullish uptrend. And a quick check on the weekly angle shows CAT in strong position on the angles. These are bull moves lasting over a year. Significant bull moves. And as you can see, each leg is getting shorter, which means your larger time cycle is running out. We took a filter through the data to find moves like this, and we wound up with 18 final highs. Then went in and got the exact dates of the final highs. They're listed here. The filter was a monthly chart used to locate the bull moves. And then you go inside the month and isolate the date. This is the results of the final highs. As you can see, May, July, and September are of interest. A wider filter here, a wider filter, could have been used to define a bull move, which would have yielded much more than 18 turns. Here, we can easily see what is statistically significant. When your cycles indicate high, let's say in May, your cycles indicate high in May, always check back your 1, 2, 3, 5, 7, 10, etc. Goes without saying. On the lows, a wider filter, what I call a wider filter, was used. A monthly chart was not. Here we have 27 turns or major lows. Actually, quite a lot of information here, which we'll take a closer look at later. Here we got the final low results. As you can see, April, May, and June, hardly anything happening. February and March are both high in number. And September, October are high in number. March and September are 1/2 year apart. All instruments, you'll see clusters like this around certain months. This is important information on preliminary analysis. "27 years of the month in which the yearly high and low occurred." Of course, this is preliminary work, so 2023 obviously is incomplete, as at the time of this video. We're in early October still. Meaning what you're looking at is you take a year and you find out where the yearly high is and the yearly low. These and what month they're in. These are the monthly results. 27 years of results on the lows fed into monthly bins yield these numbers. May, June, July, hardly anything happening. January, February, and October are of significance. January, though, is in part caused by cat being in a bull market for much of the duration of the test. In actuality, a much larger date range was studied, but only 27 years worth was used here in part to show this phenomenon. The simple explanation is if you are in a full bull market, your low point will be somewhere close to where you came into the year, usually through January, March time frame. Okay, your low will be in that area if you're in a bull market. Generally speaking, not always, but generally. The first quarter there, see. In actuality, over 60 years of data was used on cat. Remember when we started off with we were over 60 years. Just did 27 years of results here. And in the majority of that time, cat, not all, but the majority of that time is as we started off this presentation, you can see that cat is in a bull move, a bull phase. Well, if you're coming into a bull phase, your year is going to be up. Well, if your year is up, where were you in that earlier part? You were generally at a lower price, you see. So that could explain your January, February, March phenomena because the data here is primarily, not all of it, primarily taken in a bull phase. Okay. Yeah. Also note, as I said, May, June have 0, and 6 months later, October, November have 0. The white arrow starts 2016, while the blue arrow starts 2017. This bull move shows the lows occurring in the first quarter. This is logical. It therefore can be assumed that the highs in a bull move will be towards the end of the year, which is the phenomenon I've been trying to explain here. Okay. So here we had the lows. Now we're taking a look at the highs. Remember, these are the yearly highs and lows. Now we're taking a look at the highs. Note the 6 in December. Going back again and looking at the 5, because if you're in a bull phase, you would expect the end of the year, you're going to be in the higher end for the entire year. So there's 6 in December. So what I had to do is I had to go back and I had to look at those and mark which ones were in a bull phase. There was 3 up. Yeah, 3. There's 5 of them. 2003, 2010, 2016, 2017, and 2020. Okay. Only 2019 was not in a bull phase, and the final high, or the yearly high, occurred in December. Only 2019 was not in a bull phase, and the high occurred in December. This really makes May stand out as statistically significant, with almost 20% of the highs occurring in May. Note that September through November have the least amount within a 3-month time frame. Therefore, anytime your cycles show top in May, check back the usual number of years. Important to see. So, as you can see here, this is why you need to bring in a wider time frame. We've used 27 years here. I've got 60 years worth of cat data. This should have been done on 60 years of cat data. Always go back and get the most amount of data you can. Always make sure you have that when you're doing initial analysis. Okay. Your seasons, dates, and timeframes on initial analysis use a better data set than 30 years if you have the data. If your instrument goes back 30 years. If not, use whatever you got. When using data filters, use medium filters. As we saw early on with the monthly filter, the results were too strict, only showing 18. When we took out that filter, the lows came in at 27 over the 20-year time frame. And analysis, those dates yield far better information. I'm sorry, I said 27 over the 20-year time frame. Should be 27 results over. You want that to be the maximum time frame. And analyzing those dates yields far better information. Go the extra mile on your instrument. Remember, you're the one that's going to be trading this. Do the legwork.